Well, good afternoon, and thanks for joining our webinar. I'm Jessica Groskopf, an extension educator at the University of Nebraska Lincoln. Today is a part of the Center for Ag Profitability's weekly webinar series, which happens every Thursday at noon Central and sometimes on Tuesdays. A full schedule is available at our website, cap.unl.edu. Today's webinar is brought to you by Nebraska Extension's Land Link program, which works to connect land seekers and landowners who are looking to find successors. Land seeker and landowner applicants are matched with the most compatible counterparts so that mutually beneficial partnerships can be forged over the course of a transition plan. For more information about this program, join us at cap.unl.edu/landlink. Financial record keeping can be a challenge, especially for new and beginning farmers. Today, I will review the basic blocks for building a solid financial record keeping system. Throughout today's course, I would encourage you to utilize the chat or the Q&A feature to ask questions. So let's get started. So building a financial future is something that we're all interested in. And sometimes I think it's difficult to know where to start. And as we go through today's session, I really, again, would encourage you to ask questions as we think about what we need from our financial record keeping systems. So I enjoy this quote. It's from an Iowa farmer that says, "If football is a game of inches, then farming is a game of pennies." And I think nothing more could be true when we start talking about building that financial platform that we build from. And as I think about this, and we look forward to 2022 and what's happening both with commodity prices as well as inputs, we really need to be cognizant of what our costs are. So I think it's interesting. We look at the top most efficient farms in the Nebraska Farm Business Management Database, and we see that there's really no one thing that sets those top most efficient farms apart. There's not like one home run that they're making. They're doing a little bit of everything correct. And so what we see is that they might have about a 5 bushel per acre advantage in terms of yield. Each expense line is $1 to $5 less per acre than those less efficient farms. And that adds up to a total expense per acre lower of about $40 to $60 per acre. So again, these farms are optimizing their yield, they're watching their expenses, and this adds up to a more profitable venture for them. And again, this is from the top most efficient farms through Nebraska Farm Business Incorporated. So as we start thinking about building our financial future, we have to think about kind of 3 pieces, and that's costs, marketing, and productivity. And we don't want to accentuate one more than the other. These items are fairly equal in terms of our management, and we need to be actively involved in managing all 3 sets of these items. So as we start to look at costs, I think that's a lot of what's the discussion is about looking into 2022. So how are we managing our inputs? What are we doing to make sure that we're optimizing those inputs, getting the right product on the right field, and making sure that we're not doing that at the expense of our productivity. So I think sometimes we're yield maximizers, but we've got to take into account what those costs are. And again, optimizing those inputs. And the final piece is marketing. We can do a great job of purchasing products and being productive, but if we're unable to get that product sold, it doesn't really matter that we did a really good job managing those costs and that productivity. So we've got to have all 3 of these together as we start to think about building our financial future. And as we start to think about financial record keeping systems, I think we need to think about them from a knowledge and a decision-making standpoint. I've been teaching financial record keeping courses for about the past 2 years online. And one of my participants said this: "I want to know more about my operation than my banker thinks they know sitting across the desk from me." And I think this is really powerful. When we think about our financial position, I think sometimes we lean on those advisors and we say, what should we do? But it's a different mindset to say, I know more about this business and I've thought through the options that I have. So having that knowledge and understanding our financial position is very important. So financial record keeping is not just for taxes. We have to kind of build our system. And I think the first one, of course, is year-end tax reporting, but I want to go further than that. So I've got to be able to submit my documents to my banker, and that includes a balance sheet, a cash flow, and an income statement. And the top tier that I would love to see Nebraska farms and ranches get to is being able to utilize those documents for decision-making purposes. So building that stair step up, starting with getting very good at being able to complete those tax documents each year, being able to easily create those financial documents, and finally getting to a point where we are making decisions based on our financial records. So how do I need to organize my information? As we start to think through developing a financial management plan or looking at what kind of software that we're interested in, if we start with, for taxes, we need to be able to look by the tax category. And I am going to pull up this publication. It was just updated and released. Are you able to see that on the screen?
Good.
Okay, so this is the Farmer's Tax Guide. It's a publication that the IRS puts out every year. And what it does is it goes through absolutely every tax category and also does a really nice job of just outlining the types of information that you need to keep for tax reporting purposes. If you would like a copy of this document, I actually have printed paper copies that I am happy to mail to you. And we'll make sure we put in a way for you to get this in the mail. So you can drop that in the chat now, or you can follow the link on the PowerPoint so that we can see that Farmer's Tax Guide. If you've never read it, it's terribly boring, as taxes always are, but it gives you a really good idea about the deductibility of certain items and tells you how to handle specific line items for tax purposes. The other one that I would like to show you is what types of records you need to keep for your financial management system. And so as we look at this, the supporting business documents is really important. So when we're talking about reporting income to the IRS, we need to keep gross receipts that show the amount of income you received and the type of income that you received. And so that's check register tapes, deposit information, receipt books, invoices, those kinds of things. And then when you're looking at purchases and expenses, most of the time we're going to need receipts or invoices, and they need to tell us very specific things. So they need to identify the payee, the amount paid, the proof of payment, the date of the transaction, and a description of the item purchased. So I think that's really important and something that as we start this process of keeping records for financial purposes, that can be kind of a pain, but it's really important that we figure out how to get that receipt out of the pickup cab and into the office and retained in a way that we can keep them for tax reporting purposes. Just as a reminder, you should keep these supporting documents for about 7 years. So you've got that there, you can keep those for about 7 years. So this is just another IRS website that goes through what types of records someone should keep. Okay, so the next thing that we'll need to do is look at whether the item that we're tracking is an asset or a liability. So an asset is something that you own, 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 and a liability is something that you owe, OWEO. And so as we think about going through our financial documents, being able to identify what items that we own on our balance sheet. So taking an inventory of all the supplies that we have on hand, all of our equipment, land, buildings, livestock, those kinds of things. And we're going to list those out. And then we're also going to need to know what types of loans or debt that we have and who we owe it to. And then also what and when is it due. So that's really important as we go through this process is tax category, and then whether it's an asset or a liability. We also want to be able to identify our transactions by a date, in particular a month, if we're going to develop a monthly cash flow. And the last one is if we are interested in doing unit cost of production analysis from a decision-making standpoint, we also might need to be able to identify that transaction by item or by field. So for example, if I'm doing a unit cost of production analysis, I need to know not only that I purchased fertilizer, I need to know what date I purchased it, and then I'm going to need to know either whether was that for corn or was it for soybeans or was it for a particular field on my operation. So, that's the home place or that's the back 40, whatever, however you identify those. So being able to create that additional information or ways to look at that data can be important. But we're always going to start with the basics. So again, we're going to start with the tax, and then we're going to add information on top of that so that we can go ahead and go through that process. So how should I keep my financial records? And you can keep them however you want to keep them. The first way is you can do handwritten records, and I'll show you Nebraska Extension still provides the Nebraska Farm and Ranch Business Record workbook, which is a handwritten record keeping system that you can use. You can utilize Excel. I think a lot of especially younger producers start out, they're not really ready for the handwritten, but they want to do them digitally, so they start with an Excel file. Or you can jump up into a financial software. The most popular that I see farms and ranches using are Quicken and QuickBooks, but you can also use one like PC Mars or Farm Logs, and there's a million others that are out there, Red Wing, etc., that can help you start to manage and look at your financial data. So the question is, what should I select? And the answer to that depends on you as an individual. So my answer is always, what are you most comfortable with? What are you most comfortable with? Because if you're not comfortable with a financial software or Excel, you're probably not going to do a good job of keeping those records. So it's important that you do what you're most comfortable with. I would also like to know or let you know that most commercially available financial software does not have places for you to retain production information. So you're going to have financial records and you're going to have production records, and there's rarely a software that has both side by side. So for example, if we're using Quicken, there's really nowhere for me to list how many bushels of grain I sold in a way that I can keep track of that inventory easily. Now I can note it on the memo line, but it's not necessarily going to track that. So I can pull up and say, I should have X number of bushels left based on the sales that I've made. Now, some of the more financial or farm focused software will try to integrate that information into it. So this is the handwritten record document that the University of Nebraska still produces. Most county offices have these available, or you can buy one online at the web address there on the screen. They're $5, and they are really built for tax purposes. And so that would be, it's a more traditional kind of ledger style book that you can still receive. But again, they are available for purchase either on the website or should be available at your local county extension office. Excel files. I think Excel files are a great place to start, but they are difficult depending on your acumen to Excel to really keep up with the complexity of most businesses. First, they're hard to reconcile. And second, it's hard to include everything that you want it to do within the system. So if you've got multiple bank accounts or credit cards, we start to see these Excel files kind of balloon and they become more difficult. Lots of other extension services, whether it's Alabama, Illinois, or Michigan, do produce some of those documents in Excel format. So again, Alabama does have a Schedule F that you can look at if you're looking to build that. Illinois has a cash flow plan. And here's just an example from Michigan of a balance sheet. But again, it becomes more difficult if I want to take my transactions and I want to integrate them so that they automatically develop these documents. So Excel files, again, can be a good place to start. If you need assistance, maybe you've got one that you're pretty happy with, but you would like to take it to the next level. I'm happy to brainstorm how we can do that. But I think they are a challenge as we get more complex to integrate all of the features that we really need to make good financial decisions. The next software that I'd like to highlight are Quicken and QuickBooks. As I stated previously, they are probably the two most popular softwares that I see farms and ranches in. We do provide online videos that show you how to utilize these two software packages, and you can see the links there on the screen. They are free courses that you can take at your own pace at any time. What will happen is you'll register for the course and you'll be sent a password to a website that will allow you to view the video series. So those are really nice. My question is always, Jessica, should I use Quicken or should I use QuickBooks or should I use another software? Here is my Quicken versus QuickBooks outlined. So Quicken is usually a more user-friendly software. It's a little bit more intuitive. It's a little bit more straightforward. It's because it was built for personal finances. So it's a cash accounting software. Does a really good job of tracking family living expenses and off-farm income, as well as investment income and expenses. And we can manipulate its features to work pretty well for farms and ranches. When I look at QuickBooks, often when I see an operation come in that's using QuickBooks, it was recommended by their tax accountant, which is fine. But it is an accrual accounting system, which means it requires double entry. It was built as a small business software, and it includes features such as invoice, payroll, and accounts payable and accounts receivable. So when I work with most producers, my general rule of thumb is that Quicken is more affordable and user-friendly for producers who do not have payroll and do not need invoicing. Now, if you are, let's say, a feed yard or something in that vein, where you've got employees and we need to do some invoicing, that's when I would like to see you step up into a product like QuickBooks. So for the most part, almost every farm and ranch that I work with can be in Quicken. But I've got those few that are more complex and do need payroll invoicing. And that's when I recommend that we step up to QuickBooks. One interesting thing about Quicken is that you can export a file from Quicken into QuickBooks. So if your tax accountant is asking that you're in QuickBooks, we can actually make that file export without too much issue. If you're in QuickBooks, I would really encourage you to join our video series and get a handle on how to properly enter some of those transactions. I will say this, I have seen poor financial records in every format. So I don't think that there is one software or one way to keep financial records that is better than any of the others. The question is, will you do the work to make your financial records the best that they can possibly be? And so sometimes that means that you hire somebody to complete your financial records for you, so that you get the data and the information that you need. We are working on more resources, in particular related to QuickBooks, and hopefully we'll be having more information come out about that soon. So just a couple of kind of housekeeping items as we start to look at financial records, and a couple of tips that I think are really important that we sometimes forget. My number one tip for simplifying your financial record keeping process is to keep your business and your personal finances separate. A lot of times we see folks where, you know, we're running out of one checking account. And it's not that difficult to open a business checking account using a doing business as kind of name. So keeping those separate is really important. And there's some simple ways that we can do that. One, have a separate checking account for the farm or the ranch, and two, kind of color code it. So, you know, if my credit card is blue, my checkbook cover is blue. And I know that when I pick that up, I'm picking up the proper checkbook or credit card for the business itself. And this just helps keep that more streamlined. Next is keeping an accurate check register. I think this is a lost art. And we've got an article there that talks about how to keep a check register properly. There's no point in keeping a handwritten check register if it is not up to date. And so I would really encourage you, if you're just getting started, maybe your check register is your handwritten record, which is perfectly fine, but do it properly. And so that's, you know, listing the date, who you paid, and then actually calculating out what your balance is. I also like to include some of those notes I talked about earlier, including what the tax line item is. Or if we're trying to separate by enterprise, you can also include that information on there. And that article goes through a single line check register system and a double line check register system. So if you haven't thought about your check register in a while, I would encourage you to read that article and think about updating your check register. The next one is reconciling monthly. So reconciliation is the process of making sure that one financial record is consistent with another. So again, if I go back to the very basic financial record keeping system, which is a check register, I want to make sure that those match. So I'm going to check my monthly bank statement to my receipts. I'm going to check here, it says ledger of accounts, but that could be a check register, or it could be some sort of financial software or Excel file to those receipts. And then I want to make sure that the bank statement and the ledger of accounts are all equal. So this is really important when we talk about kind of mess ups when it comes to tax time. It's that folks are not reconciling. And when we aren't reconciling, we're not catching, boy, you know, I didn't categorize that $10,000 deductible expense in the right category. And so reconciliation is that opportunity to stop and think through the process of, is this in the right location? And are we properly reporting that to the IRS? There is, again, another article here. You can use your phone to scan that little QR code, or you can type in the link, and you can see that we go through step by step on how to reconcile your documents. And I think it's really important to be consistent in that reconciling process and do it on a regular basis. Consistency absolutely is key to this entire endeavor. If we're going to start a year with a given financial record keeping system, we need to commit to retaining that system throughout the year. I know it's easy for us to get behind, things get busy, we'd rather be out in the field, but being consistent in our record keeping system is very, very important. The next one is who is on your financial team and who's on your management team. And you do not have to do your financial records alone. Number one is probably your banker, and that's the person you probably rely on the most to make financial record decisions or financial decisions. The second would easily be your tax accountant. I would encourage you, especially as we come into later in the year, we're thinking about potentially some prepaying some expenses at the end of the year, that you're having discussions with both of these people, and it might be good to have them both in the same room. So do your tax planning meeting with your banker present might be a really interesting activity. You also probably have a lawyer if you are working on an estate plan or have a very complex farm operation or ranch. It might be important to include them on this. And a marketing advisor. Who do you bounce marketing ideas off of? And then you've got all of your production people. What's important about building this team is knowing that at the end of the day, you are the CEO of your business. You are the one who makes the final decision, and you are the one who bears the ramifications of that decision. And I think sometimes we think, well, I have this advisor and they make this recommendation, but it's really important that we view that recommendation from multiple sides. And I think that's very apparent when we talk about the difference between getting advice from our banker versus getting advice from our tax accountant. They're coming at the problem from two separate directions. And so especially if you have a large tax liability, and you're looking at how do I mitigate that tax liability, it might be important for you to pull in both the banker and the tax accountant into that meeting to have that discussion. I would like to point out that there are lots of resources in Nebraska to help with financial analysis. The first is Nebraska Strong Financial Services. This is a service provided through the University of Nebraska and the Center for Agriculture Profitability. This is a service that provides whole farm and enterprise analysis, cash flow planning, benchmarking, and decision-making support. It is a fee for service, but it is a great place if you're thinking about making a big move and you need some help making that decision. For example, if you're looking at purchasing some land, this is a really great resource to help you do that. The other one, and our partner, is Nebraska Farm Business Inc. Nebraska Farm Business Inc. Helps with the benchmarking. I showed you earlier our top most efficient farms, and that comes from the Nebraska Farm Inc. Database. They also provide accounting and tax services and also do some farm analysis. So they're a really great resource. Tina Barrett and her team do a wonderful job at Nebraska Farm Business Inc. I think more than anything, you need to focus on your finances, especially as we come into 2022, or if you're a new and beginning farmer, working on building really that solid financial foundation to help you make those decisions on a regular basis. If you need help, let us know. There's lots of resources out there from the University of Nebraska Lincoln, as well as those two resources that I just showed. Sorry about that. To help you with some of this kind of information, today we spent about 30 minutes talking about how to start this process. And I think it can be important to dive into some of those little places and get more education. So our primary workshop that we teach is Know Your Numbers, Know Your Options. It's a course that goes through each of the financial documents and teaches you how to analyze those documents and begin making decisions on those documents. Our next session will be Tuesdays and Thursdays in late January, January 18th, 20th, 25th, and 27th from 6:30 to 8:30 p.m. Central Time. And so that's our next session of Know Your Numbers, Know Your Options. We hold that course virtually almost every month. We won't be doing a December session, but basically once we start back into 2022, you can see that on a fairly regular basis from Nebraska Extension. I also teach in-person Quicken workshops. So if you're not somebody who likes to do the online videos, you can come in person. Right now, I'm scheduled to be in Bassett on December 8th from 8 a.m. until noon, teaching you basically from start to finish how to set your farm or ranch up into Quicken, and also providing you with resources so that you can continue that process when you get home. We also have some livestock unit cost of production workshops happening in Scottsbluff and in Mullen. And you can check out all of these educational activities on our website at cap.unl.edu. And finally, kind of as a part of this project, I'd like to remind you that the Returning to the Farm workshop will be happening in Columbus, Nebraska, December 10th and 11th, with virtual follow-ups January 13th and February 10th. This workshop is specifically for families who are bringing back college-age kids back to their operation. And it's a really good opportunity for families to discuss how they're going to make it work. So with that, if you have any questions, I will hang on here for a little bit. I see I've got one address in my inbox to send a tax guide to. We'll make sure we get that to you. Otherwise, I want to thank everybody for joining us today. A recording of this webinar will be posted at cap.unl.edu, where you can also register for our other upcoming webinars. We hope that you will join us again on Thursday at noon Central Time for a presentation on fertilizer prices and managing production costs to navigate a riskier financial future. Please take a minute to click the link in the chat box and take a brief survey to provide feedback on this webinar and inform us about upcoming sessions. Thank you for joining us today.